I, Dushyant Parashar, Senior Sustainability Manager from the KBS Certification Services, welcome you all to the today's webinar. Starting with a quick introduction of what KBS certification is. So, uh, our global network, I may say, the footprint of KBS in this slide. The services we provide in 60 plus countries. We have offices in 11 plus locations in 7 countries. A team of 200 auditors is spread all over the globe, working day and night for the climate change and the sustainability projects. And we have a separate vertical of the KBS Training Academy that has 50 plus trainers associated all over the globe, imparting trainings on the different ISO standards and the other topics. A small review of the achievements that KBS has gone through the 2 decades of its auditing experience. We have onboarded more than 500 plus clients across energy, oil, and gas sectors. Since 2011, the KBS got the accreditation from UNFCCC. Under CDM, we have verified 35 million plus carbon credits, which covering 2,500 projects validated, verified. Talking about the accreditations and approvals, we have 20 plus accreditation approvals, the highest in the compliance world for the climate change market. That is Article A6.4. That is also with us, and the various accreditations and approvals from the voluntary to the compliance market. You name it, we have it. Trainings conducted 6,000 plus all over the globe. Certified clients 20,000 plus, and third party inspected conduction. Since 2022, we have 200 plus clients. A small view of the services that are available in the KBS basket, that is management system certification, sustainability services, climate change, training, product certification, energy audit, and the third party inspection. Under sustainability, KBS provides AA 1000 AS assurance standard, sustainability assurance and the GHG verification validation on ISO 14064, GHG protocol, carbon neutrality assurance, airport carbon accreditation services, water footprint, water audits, product carbon footprint as per ISO 14067, BSR assurance service, support in the CBAM filing of the data, gap assessment the CBAM filing, life cycle assessment, EPD development, and the sustainable procurement. This was quite an introduction of the different services and the sustainability and the services which KBS has under its basket. So with this, I'll hand it over the stage to Mr. Abhinav, a lead auditor, a lead trainer with us, KBS certification services, having 10 years plus of experience in the sustainability and JG accounting world, having a great industrial experience, environment impact assessments, GHG accounting, and everything. So, Mr. Abhinav, over to you.
So, good morning, everyone, and thank you for joining this session. So, before we begin, let me clearly set expectations for today's webinar. So, this is not an introductory CBAM session. This is, we can say, session is about how CBAM actually enforces carbon pricing after the December 17th, 2025 regulatory package. The title of this webinar is very intentionally framed. So, CBAM has fundamentally shifted away from being a border reporting mechanism and has become a supply chain level carbon enforcement system. Earlier, there were not clarity, and many companies believed that CBAM was about CN codes, custom declarations, reporting numbers in a portal. That is, understanding is now outdated. After December 2025, CBAM has made clear that it is more about how product was physically made, where emissions were actually generated, whether your data can survive regulatory scrutiny or not. This is why the phrase from broader control to supply chain reality is central to today's decision. By the end of this webinar, you should clearly understand why CN codes only trigger CBAM but do not define exposures. Why supply chain restructuring without emission reduction no longer it is going to work. Why verification is no longer formality but an enforcement tool. Why CBAM compliance is never closed after filing. And yes, so today whatever we are going to discuss is based or grounded on the basis of regulations, a regulation published by CBAM authority. and its December 2025 amendment packages. Let me walk you through the structure of this session. So we are going to move in four parts, and this sequence is important. Sure, we are going to send this link with you all. So let me walk you through the structure of this session. We are going to move in four parts, and this sequence is most important. So first, we are going to discuss, we will scope and embedded emissions. Here we will understand how CBAM define what it regulates and why emissions are linked to production reality rather than customs classification. Next, in part two, we are going to focus on carbon leakage control. This section, I'm going to explain you why CBAM expands downstream and why this expansion is driven by economic modeling, not policy preferences. Next, in part three, we are going to address circumvention and verification. This is where your most compliance failure will occur post 2025. I mean, if we talk about post 2025, that means from 2026 onwards. And here we will discuss that verification is no longer about checking math. So it's all about proving credibility through verified data. In part 4, we are going to explain end-to-end enforcement. So we will here walk step by step through how CBAM is enforced from custom entry to retroactive reassessment years later. Agenda, basically it mirror how regulators think, not how companies traditionally structure compliances. So that is main difference here. So before discussing penalty certification and verification, we must first understand what CBAM actually regulates. CBAM does not regulate trade volume, corporate structure, or legal ownership invoicing route. CBAM regulates embedded emission generated by physical production activities. So every enforcement mechanism you will see later flows from this single principle. So if you misunderstand this foundation, CBAM compliance will fail regardless of how good your reporting looks. CBAM must be understood as part of the European Union's broader climate enforcement architecture rather than as a standalone reporting obligation. So the EU operates carbon pricing mechanism through the EU emission trading system, under which EU producers are required to purchase allowances corresponding to their GSA emission. So this create a real and increasing cost of production with the EU. At the same time, many imported goods entering the EU originated from jurisdiction where carbon pricing is weak, partial, or entirely absent. So this imbalance creates a structural risk known as a carbon leakage, where production shipped away from the EU, not because of efficiency or innovation, but because of uneven climate regulations. So basically, CBAM was introduced to address this imbalance by applying a carbon cost at the EU border that mirrors the cost borne by EU producers. Importantly, CBAM was never designed as a ESG disclosure framework or any sustainability reporting initiative. So it is a trade and custom instrument with a climate objective. We can say yes, we can say it as a trade and custom instrument with a climate objective. Its purpose is not transparency or its own sake, but the preservation of climate integrity and competitive neutrality. However, the EU recognized that such a mechanism could not be enforced immediately. For the reason, CBAM was introduced with a transitional phase starting in back to October 2023. This transitional phase was deliberately designed as a learning period for regulators, importers, exporters, and systems. The December 2025 update basically marks the end of this learning phase and the beginning of full enforcement. So this webinar focuses specifically on what changes at the point and what those changes mean in practical term for data reporting and independent review. So during the transitional phase, from October 2023 to December 2025, CBAM functioned primarily as a monitoring and data collection system. Importers were required to submit quarterly CBAM report containing information on imported quantities, country of origin, and embedded emissions, which most of the traders or most of the industries who were associated were already reporting this. So crucially, however, this reported submissions had no immediate financial consequences, were not facing any financial consequences. Importers were not required to purchase or surrender CVM certificates during transitional phase, and there was no price attached to that reported data. Because no money was involved, the regulatory approach during this phase was intentionally flexible. Authorities explicitly allowed the use of estimated emissions, conservative assumptions, supplier average, and incomplete data sets. Exporters were not required to have any, installation level monitoring system in place, and independent verification of emission data was not mandatory. This tolerance was not oversight. It was a conscious policy choice. It was conscious policy. It was choose. It was designed to allow supply chain to familiarize themselves with CMM requirements. From a regulatory perspective, this phase allowed the European Commission and national authorities to observe reporting behavior, data gaps, methodological inconsistencies, and potential circumvention or risk without immediately disrupting trade. So it is critical to understand that this tolerance was always temporary and time bound. The regulatory text made clear that the transitional phase was not a permanent compliance model, but a preparatory stage before CVM became financially operative. Transitional phase progressed, authorities began analyzing the data. So as a transitional phase progressed, authorities began analyzing the data submitted through the CVM registry. This analysis revealed several systematic weaknesses. One of the most significant findings was the wide dispersion of reported embedded emissions for identical products classified under the same CN code. In many cases, emissions value varied by multiple rather than margins. So without any tradable explanation rooted in production reality. So these inconsistencies were not the necessarily the result of bad faith. In many cases, this reflected the absence of harmonized methodologies, weak data system, and the lack of verification. However, from an enforcement perspective, this created a fundamental problem. A carbon pricing mechanism cannot function if the underlying data is not comparable, reproducible, or defensible. So if CBAM were to enter the definitive phase with this level of data uncertainty, the result would be either underpricing carbon for some imports or overpricing it for others. So it would undermine both climate integrity and trade fairness. So the commission therefore concluded that CBAM could not become financially operational without a significant strengthening of enforcement rules, particularly around data quality, emission attribution, and verification. So this conclusion directly led to December 2025. Now let us understand about uh, December 2025, its nature of uh, its nature of this regulatory package. So this December 2025 CBAM updates basically it represent a structural shift in how the mechanism operates. Before the point, CBAM primarily defined what information needed to be reported. After December 2025, CBAM defines how the information will be used to impose a financial obligation. So this distinction is very critical. And from this point onward, reported embedded emissions directly determine the number of CBAM certificates that an importer must surrender. So those certificates are priced in line with EU ETS, meaning that emissions data now has a direct and potential volatile monetary value. As a result, regulatory system can no longer rely on trust-based or best effort reporting. So this shift fundamentally changed the compliance expectations from all parties involved. Data quality become a legal and financial issue. I mean, from now onwards, it become legal and financial issues. It, it is not limited to only administrative one. So reporting becomes a position that can be challenged and it has to be corrected or recalculated by authorities. So independent review here from now onwards, independent review becomes a mechanism through which credibility is established. In effect, December 2025 marks the point at which CBAM transformed from a reporting exercise into enforceable carbon pricing regime. So let us understand CBAM as an integrated compliance system. So here we are going to understand why data reporting and independent review, basically why it becomes central, why it is become central to this entire reporting system. Independent review become central to entire reporting system. So after December 2025, the entire CVM system revolves around three interconnected elements. That is data reporting, verification, and enforcement. Again, I am repeating it. Data reporting first, then came verification. That is verification of your data, what you reported. And last one is enforcement. Sorry. So embedded emissions data basically determines its carbon exposure. Carbon exposure determines the number of certificates required. Certificates determine its financial cost. So any weakness in the data chain, therefore, directly it will translate into financial risk here from here onwards. So default values play here very a critical role in the system. So they are designed to be conservative, which we use in transition during transition phase. Most of the industry we use default values for calculations. So basically they are designed to be a conservative and often have higher value than average actual emissions. So their purpose is not, to convenience, but it is for protection of environmental integrity. So when data is missing and it is inconsistent or that data is not verifiable by regulatory, it is not verified by authorized, CBAM authorized verification body. So yes, it is not verifiable. So from here, authorities basically are empowered to apply these default values on unverified data, and it will result in higher CBAM cost. So independent verification is the mechanism, or I can say that tool that allows companies to avoid this outcome. Verification provides assurance that reported emissions reflect physical production reality and it comply with prescribed methodologies by CBAM. So basically, without verification, authorities cannot rely on any, reported data once financial exposure will begins. In fact, from 2026, yet there isn't any financial exposures, but this data for 2026 is going to be verified. Uh, yet till now there isn't any verification. CBAM has not given any clear understanding or clear any clarity on which body or which agencies are going to verify this data. But we believe sooner they are going to declare this, and probably on the EU ETS body who are accredited and the EU ETS are going to verify this CBAM data. I mean, there will be separate channel created by regulatory authority within EU ETS nations, and they will be responsible for guaranteeing accreditations to verification bodies for verification of data. So this is why independent review will no longer be an optional. So it becomes a core condition. It will become a core conditions for using actual emission data under CBAM from now onwards, from 2026 onwards. So yes, prior to this, Prior to discussing CN codes, let us understand why enforcement starts at custom. So CBAM enforcement is an anchored in customs because customs declarations are the CBAM enforcement is anchored in customs because custom declarations are the only legally binding records at the point where goods enter the European Union, right? So every import into the Europe must pass through customs. And the data generated at the stage, including the CN code, country of origin, quantity, and importer of record, has legal standing under legal standing under Europe law. So this make custom the natural and unavoidable entry point for CBAM enforcement. However, it is important to understand what custom does and does not do under CBAM. So custom authorities do not assess emissions or carbon intensity or calculation methodologies. Their role is limited to ensuring that goods falling within the CBAM scope are correctly identified and the importer is registered as the CBAM declarant. Once this condition is met, the product is formally brought into the CBAM control system. So this design ensures legally certainty and uniform application across all the member states. Every CBAM relevant import is captured at the border without any exceptions. So at the same time, it is sap it deliberately separates custom control from carbon enforcement. So carbon exposure is not determined at the border. It is determined later based on emission data that will link to production reality. This separation will be essential to avoid any oversimplification and misrepresentation of emission. Next, can you, no need to go on next slide. Let us discuss about CN codes as entry triggers, not CBAM carbon boundaries. So CN code plays a critical but limited role in carbon enforcement. So they are used to identify whether a product is potentially subject to CBAM based on the list of annexer of regulations. This function is basically a binary, and either the product enters the CBAM system or it does not. CN codes does not and were never intended to determine carbon exposures. So the limitations of CN code lies in the original purpose. They are aligned for tariff classification trade statistics, not for capturing production method. So energy inputs or emission intensity energy inputs or emission intensity. A single CN code can cover products produced using vastly different technology, fuels, and efficiency levels. During the transitional phase, authorities observed that products sharing the same CN code could have embedded emissions differing by several multiples. If CBAM enforcement relied solely on CN code, it would systematically misprice carbon. So low emission producers would be penalized, while high emission producers could be undercharged. So this would undermine both climate integrity and competitive fairness. So for this specifically reason, CBAM enforcement deliberately moved beyond CN classification. Once once it is entered, once its entry is triggered. So CN code basically it opens the door. They do not decide to, it does not decide the carbon cost. Now let us discuss about embedded emissions, how its legal definitions and boundary. So embedded emissions basically already, as I said, with this basis of this seminar is on based on article regulation 2023/956, and from that, if we refer the core of quantitative basis of CBAM. So they basically represent the greenhouse GHG generated during the production of CBAM good calculated at the installation level. This include direct emission from fuel combustion, direct process emission inherent to industrial reactions, and indirect emissions from electricity consumption where applicable under sector specific rules. So emphasis on the installation level is here deliberated. It ensures that emissions are tied to physical production reality rather than corporate structure or commercial arrangements. So legal definition make clear that embedded emission must reflect what actually happens in the production process, not what is convenient to report or contractually allocated. So December 2025 update reinforces this definition and it align it with enforcely. So emission must attribute measurable and defensible. Any WAG or any aggregated data cannot be traced back to a specific installation. No longer it meets the regulatory expectations once CBAM becomes financially operative. So, if we talk about production reality as the enforcement anchor, so CBAM basically enforcement is built on the principle that emissions follow physical production, not legal or any commercial arrangement. So authorities, they do not assess emissions based on who owns the factory, where contracts are signed, or which entity issued invoices. These elements are irrelevant to carbon accounting under CBAM. Instead, enforcement focus on where the physical transformation of the product occurred. The installation that consume fuel, use electricity and generated process emission is the installation responsible for embedded emissions. This approach basically it closes common avoidance of pathways such as contract manufacturing, toll processing, or the use of a special purpose entities to distance emissions from the exporter. So, December 2025, they have explicitly reinforces this principle because the Commission identified legal restructuring without decarbonization as a systematic risk. Without this anchor is without this production reality, CBAM could be gained through proper paperwork rather than emission reduction. So this regulation basically, therefore, it makes it clear that changing legal form does not change any carbon exposures unless the production process itself changes. Uh, the practical consequences of anchoring CBAM enforcement is production reality is basically straightforward but far-reaching. If a producer does not change how a product is made, the embedded emission remain the same. Remain the same. So if emission remain the same, CBAM exposure remain the same. No amount of contractual, logistical or legal restructuring can alter this outcome. So the principle here is directly affects how exporters and importers must approach compliances. So it eliminates the effectiveness of supply chain optimization strategies that do not involve genuine emission reduction. So it also places pressure on producers to invest in cleaner technology, cleaner efficiency, and low carbon electricity if they want to reduce CBAM cost. And I mean installation want if they want to reduce CBAM cost. So they have to focus on cleaner technology, energy efficiency, and low carbon electricity. That is only option. From an enforcement perspective, if we talk from an enforcement perspective, so this principle basically simplifies, authoritative action. Regulators do not need to analyze complex, their corporate structures. They only need to establish where production occurred and whether that reported emission accurately reflect that production. So this basically makes CRM both. It does make more robust and more defensible as a current pricing mechanism. So let us discuss why carbon leakage must be reassessed. So basically, this CBAM regulation requires the European Commission to periodically assess whether carbon leakage risk extend beyond the basic materials initially covered by CBAM. So this provision reflects a core regulatory insight. Basically, carbon leakage is not, I can say, this carbon leakage is not a static. It evolves as a theme adapted to carbon pricing. So one carbon cost are applied to basic materials such as steel or aluminum. So economic pressure here does not disappears suddenly. So basically it is transmitted along the value chain. So the commission assessment following the transitional phase so that applying CBAM only to basic materials create a downstream distortion. So EU producers of finished or semi-finished goods will face a higher input cost because the purchase CBAM cover material price with carbon. At the same time, imported downstream products that embed the same material but it fall outside the CBAM scope that does not bear CBAM cost. So this create a competitive imbalance that in that incentivize the relocation of downstream production rather than emission reduction. So, in fact, this article also, I mean, therefore, it function as a corrective mechanism. So it allows the CBM scope to evolve in response to observed market behavior. So this December 2025 package, it operationalized this requirement by providing the analytic and enforcement framework through which downstream leakage risks are identified and addressed. Yes, so here we are going to discuss uh, is why steel and aluminum dominates leakage risk. We are going to discuss specifically regarding about steel and aluminum uh, domain. So steel and aluminum were identified as a priority sector because of their structure and characteristics. So together they account for a large share of CBAM relevant emissions. Even when it is used as inputs in downstream production, their carbon footprint remains significant relative to the total product emissions. The impact assessment demonstrated that downstream processing of steel and aluminum often adds limited value in emission terms. So cutting, forming, machining, or assembling components typically does not dilute the embedded emissions from primary material production. So as a result, downstream goods remain carbon intensive even if they are no longer classified as a basic materials. So in addition, steel and aluminum based supply chains are highly exposed to international trade, specifically for countries like India. We are highly exposed and for this export of aluminum and steel. So they are basically price sensitive also. And globally, it is very mobile and characterized by a strong competition from producers in respect with lower or no carbon cost. So these future features make them very vulnerable to carbon leakage once upstream costs are going to rise. So from this updated December 2025 proposal, therefore, it focuses first on these sectors because they present the clearest and most enforceable leakage risk. So, scope extension under CBAM is not automatic for politically driven. It is based on a structured assessment framework that designed to balance environmental integrity with its enforceability. So, the Commission applied three core criteria before extending CBAM to downstream products. First, carbon relevance. The product must contain a significant share of emission attributed to the CBAM covered basic materials. Second is leakage risk. And the third is technically feasibility. So under technical feasibility, emissions must be measurable and attribute using available production data and methodologies. Only here production products that meet all three criteria are considered suitable for inclusion. Carbon leakage as a dynamic stepwise process. Carbon leakage does not occur in a as a single immediate shift of production. It basically it unfolds step by step as a firm respond rationally to cost signals. When CBM increase the cost of basic material, Europe producers of downstream good will face higher input prices. If those downstream goods remain outside CBM scope, import gain or relative price advantages. This advantage encourages sourcing of finished and semi-finished goods from outside the Europe rather than domestic production. So over time, the shift production and associated emission of the EU without reducing global emissions it will impact CBM export emission rather than mitigate them. From an enforcement perspective, scope expansion is designed to neutralize incentives rather than its behavior. So Europe does not assume that firm act in a big fact. It assumes that firm respond rationally to prices. If carbon cost can be avoided by moving one step down to the value chain, firms will do so. CBAM it enforcement therefore aims to remove that incentive by extending scope to downstream products where leakage risk is proven. CBAM ensures that moving production does not reduce liability unless emissions are genuinely reduced, and this align economic incentives with climate objectives. So this approach avoid heavy-handed restrictions on trade while preserving environmental integrity. It also provide predictability to industry by making clear and supply chain restructuring along with not provide a long-term escape for carbon pricing. During the transitional phase, the commissions basically identified several restructuring patterns that while legally permissible, and it basically undermines CBAM objective. So this include importing more processed goods instead of basic materials, relocating minimal processing steps outside the Europe, and redesigning it product classification without changing underlying emissions. Such strategy is going to reduce CBAM exposure on paper, but it does not reduce emission in reality. If it left unchecked, that would erode the effectiveness of CBAM and incentive carbon intensive production abroad. So in last December 2025, so that package explicitly addressed these patterns by tightening scope, attribute rules, and verification requirements. Let us discuss how enforcement response to restructuring risk will impact this. So the enforcement response to restructuring risk is multi-layered. First, CBAM scope is extended where leakage risk is demonstrated. Second, CN codes may be refined for disaggregated to better capture material composition and carbon relevance data. Third, condition Third condition for using actual emission data are tightened in high risk situations. So verification and traceability requirements are strengthened to ensure that emission data corresponds to physical production reality, where basically authorities detect patterns to avoid, they may impose additional evidence requirements to restrict any reliance on simplified methodology. So this combined effect of these measures is to ensure that carbon pricing follows submission through the supply chain. Restructuring remains possible, but it only reduces CBAM exposure if it results in real emission reduction. Let's just discuss what are main six stage enforcement flow, authority, power, and control mechanism. So CBAM enforcement operates as a connected chain rather than an isolated obligation. So the process begins with customs, where imported quantities and classification are legally used. The data flows into CBAM registry, where emission data is linked to each import, and verification status is then attached to the reported emissions. Based on that combined data set, the registry determines the number of CBAM certificates and then it came from CBAM registry. The data is verified independently. It is independently verified by different consultants. So let us discuss stage 1 and 2, where I think we are getting a lot of questions. Role of national competent authorities. So national competent authority are the primary enforcement bodies under CBAM. Each member state designates an authority responsible for reviewing the CBAM declaration, verification outcomes, and supporting documentations. And national competent authorities have the power to request additional information, conduct detailed reviews, and reassess reported emissions. Importantly, NCAs are not bound by importer declarations or verified conclusion if they identify inconsistencies or any weakness. So basically, verification reduces risk, but it does not eliminate authority oversight. If any NCAs determine that reported emissions are not credible or sufficiently supported, it may reject them and impose default or penalizing values. So NCAs also have the authority to, reopen past recording periods. This will reinforce the principle that CBM compliance is continuous rather than transactional. Importers and exporters must therefore maintain the documentation and evidence long after initial submissions. Role of European Commission is basically here enforcement. While NCAs handle day-to-day enforcement, the European Commission retains a central supervisory and corrective role. So the Commission monitors CBAM implementation across the member states to ensure uniform application. It basically analyzes registry data at an aggregate level to identify systematic risk or any emerging loopholes. So where such risks are identified, the Commission has the power to act. It may propose refinements to CN codes, tighten conditions for using actual emission data, or introduce additional requirement for high-risk sectors. It may also propose scope extension under the given article where leakage risk is demonstrated. So basically, the central role is essential because CBM risks are very often cross-border and it's systematic. So leaving enforcement entirely to national authorities could basically create fragmentation and inconsistency. So Commission oversight ensures that CBM remains a coherent Europe-wide, EU-wide mechanism. Default values here play a very central role in CBAM enforcement. So they are not designed as a convenient fallback or missing data. They are deliberately conservative and often higher than average actual emission, as discussed in my first slide. So their function is to protect inverter integrity where data quality is insufficient. When authorities cannot rely on reported emissions because of weak evidence, inconsistent methodology or any failed verification, default value will be applied, and this will result in higher CBAM certificate obligations, and therefore cost will be higher. So the economical signal is very clear. Poor data quality carries a financial penalty for this. This December 2025 package basically introduced a risk-based approach to enforcement, where authorities identify higher, risk. They may impose strict conditions. This may include additional evidence requirements or any, restrictions on use of simplified methodology or enhanced verification scrutiny. Risk factors will include abnormal emission patterns, inconsistent reporting over time, sector-specific evidence of any behavior or lack of any traceability. In that case, the burden shifts to the declarant to demonstrate credibility. Actual emissions become a very privilege rather than an automatic right. Like, let us discuss penalties in the CBAM enforcement model. So penalty exists under CBAM, but they are not the primary enforcement tool. The system prioritizes economic correction through recalculations and default value rather than immediate punishment. So penalties are generally applied where non-compliance is persistent, it is intentional, or it lacked any cooperation. So it approach reflects the regulatory philosophy behind the CBAM. The objective is not to penalize trade, but to ensure that carbon pricing is applied correctly and consistently. Penalties serve as a backstop where other enforcement mechanisms are insufficient. What it is going to, what exporters are going to face. So although legal liability results with Europe importers, exporters become very primary source of CBAM risk after December 2025. Embedded emissions can only be calculated at the production installation. This places exporters as the center of the data generations and evidence provision. So exporters must therefore develop installation level emission accounting system aligned with CBAM methodologies. They must maintain documentation capable of withstanding independent verification and authority review. if they are going to fail this or increase CBAM, it will increase CBAM cost. So CBAM thus uh, it basically CBAM transform emission data from a sustainability metrics into a commercial factors influencing market assess. Importers, as we discussed that importers will are going to face this if they have gap in their data. So verification and validations of data is very important, and it has been forced. So importers basically they are responsible for this verification of data, and penalties will be exist under CBAM, but primarily not it is not so basically installation level data need to be verified whether emissions are calculated at correct production facility with proper boundaries. Methodology and compliance that will be also considered during verification whether that is going to be has been right methodology have been adopted or not. And traceability of data, so this is main factor. They will check whether your data is traceable or not. So this basically, if you are going to miss this verification and validation, it is going to impose or risk on your CBAM reporting. It is going to increase cost of your product.
So thank you everyone for being with us for so long. We really appreciate your time. So this was about the CBAM. We thank you to Sir Vinod sir, and for the glimpse of the BRSR. We thank you for Dushyant sir. It was a great webinar, and really thank you for your time. We will be again seeing you in the next webinar and our trainings. I will also suggest you and ask you to go check out our website. And also, your questions that you have asked, we will be mailing you with the webinar video recording and PPT and your particular question that you have asked in the webinar. Thank you.